Hello, and welcome to the Tax Advisor and Biz Coach Success Weekly Podcast. The purpose of this episode is to help entrepreneurs to become more successful and avoid tax headaches. I am your host, Liz Soria, and I specialize in tax advisory and business coaching. Let's get started with episode 6. On this episode, we're going to describe a little bit the different types of business tax deductions. And that has to do with, for example, depreciating type of assets that you purchase. And during the depreciation, depending on the type of asset that you purchase, it has certain years that you can depreciate. And why this is important? Because a lot of people think, well, I purchase, let's say, for example, a printer, and let's say that it's, well, now in these days, we do have quite a lot of printers out there, but they're very affordable. But if you buy something in the high end, obviously it's going to cost you a little more money. So let me just give you an idea how the system works and why it's important not to always deduct 100% up front. Because if you're planning to have more revenue in the future, you always want to have that carryover deduction accumulated. That way it reduces your income as you generate it year by year. So, in very few occasions, again, with a lot of good tax planning, you want to determine whether or not this will be something beneficial for you. Do I deduct 100%, which is available, and that's called a Section 179, where you can depreciate. Let's say you got a printer and you purchase one for $1,600. You can actually deduct the entire amount of $1,600 on the same year that you purchase it. Okay? Now, that asset that you purchase must be tangible, meaning it has to be a property, including like a software. Okay, but not real estate. Okay, there's not such a thing as 100% deductible in real estate. I've been getting some of that questions in the past. It has to be based on a trade or business, right? You must take the deduction in the year you start using the asset. So if you purchase something last year, you cannot deduct it this year. So you need to take the full deduction in the same year that you purchase it. I want to be clear about this. Okay. Now the deduction, the maximum right now, it's $500,000. Okay. That's like a total acquisition, and it cannot be greater than $2 million, because that's when it starts phasing out, meaning it just there's no more deduction. Okay. But it is a 500 allowable per year, 100% deduction that you can do. Okay. Now, a lot of times, like I said, it's not beneficial to take a full 100%, because if there's future revenue, you want always to have something that's going to reduce against that income. Okay. And if that's the situation, then we can use what is called depreciation, which you probably have heard of. And one of the most common one is called the MAKERS, which is the Modified Accelerated Cost Recovery System. So let me go back to the first example that I was saying with 100% deduction of Section 179. Let's say that you're forecasting that this year you're going to make maybe 30% more than what you did last year. Therefore, when you do your tax return, you want to make sure probably to take and deduct the accelerated method instead of using the full deduction. So let me give you an example. That way, because I think examples really help a lot to understand the subject. If you purchase that copy machine for 1600, let's say it was at the end of March, okay, of this year. Assuming the machine roughly has a salvage value of $400. That means what's worth the value at the end of the years of depreciation, okay, which is actually 5 years for these type of small equipments. Then you can depreciate roughly almost $1,200 of that cost over the life of the copier, meaning that on the first year, since you started 3 months into the year, that means that you're going to take about 75%. So that's roughly to say it's $180 on the first year. Second year, about 240. Third year, about 240. And that is a reduction of your income. This is why it's important to really determine, is it worth now to take a full deduction, or is it worth taking partial deductions to reduce that future income? Okay. Now there's something else that's called the 50% bonus depreciation. 50% bonus. And the way that works is usually you can deduct 50%. So again, we can go back to the initial example where we can say, well, you know, I don't want to take perhaps only 30% that the accelerator, makers depreciation is giving me, but I want to just take, 50% off. Okay. Now it has to be a new equipment, cannot be used. And then you can take that 50% and apply it, and then just use the depreciation remaining for the rest of the years. Okay. Always keep in mind that there is really a category of years depending what type of asset you're purchasing. So let me define this. 3-year property is called. That includes like certain manufacturing tools, some tractors, small things that can be depreciated in that 3-year time frame. And then you have the 5-year property, which includes computers, office equipment, cars, light trucks, okay, and even assets under use for in construction. And then we have the third one, which is the 7-year property, and that includes office furniture, okay. Office furniture when we mean in a higher purchase price. Appliances, property that hasn't been used in any other category, then you can use the 7 years. So you got the 3-year, the 5-year, and the 7-year. Okay. Now for rental properties, a lot of people confuse this a lot. If it is a residential property that you're purchasing, you can depreciate that if you convert it into a rental property at 27 and a half years. If it's a commercial, then it's 39 years. Okay, so once again, I hope my information has given you some sort of help. And I think what's important, again, is to determine what's going to be a better option for you. We always want to do a projection, a forecast, to have an idea how the business is running. And based on that, you can determine what's going to be a better option. So thank you again. This is Liz Soria with the Tax Advisor and Business Coach Success Weekly Podcast. As usual, if you have any questions or you would like to discuss anything in a personal matter, please contact me. The information is available through my profile, and also you're welcome to share my link. Thank you so much.